Right, we're here. This is the MA video that I keep telling everyone I'm going to make. This is going to show you the reasoning behind why I trade the MAs. Obviously I trade support, resistance, fib levels. If you follow me on Twitter, which I'm pretty much sure that you do, you'll know the style of trading that I do. But this is, I get asked a lot about the MAs because not a lot of people trade them. So this is the video, and I'm just going to run through. This is Stratis on the 1 hour. I find the 1 hour works best with the MAs, specifically 7, 25 and the 99. So if we have a look here, 99 is the pink one, 25 is blue, and the 7 is green. So let's start on here. So when they're tight like this, I tend to ignore it. So I wouldn't actually have entered here or I exited here. If you held Stratis, this is one possible trade that I usually do, which you might have seen me mention, short scalping. I do it a lot with BNB and Bitcoin. I actually do it with Bitcoin back to Tether to then buy back more. So this is the cross. This is the first cross. 7 crosses the 99. Now the reactions are a lot stronger when this cross occurs over the 7 and the 25. So this is where I will look to sell my bag if I'm holding and buy back lower. So you have a down there, the two candles close below the 99, and then we get that push down, which eventually comes down to 11%. Now you're not going to time this perfect. You probably would even buy here when you see that that bounces back up, which if we pull that through, now it's crazy to sell, you know, 100% of your bag, but if you did 25% and you've got 7.5% at buyback when you buy this bounce, you're looking at 1.75, maybe 1.5 after fees, with a pretty risk-free trade. Because what I tend to do is once I've sold, I'll have a buyback here, so I'll use a stop buy. So I'm essentially shorting my bag on Binance, and that's just one thing that I usually do, a little bit tied to MAs as well. So let's run through here. So we come down, we find the bottom, springs back up, and then check this. This is what you look for. So we've confirmed that that is a temporary bottom. You would have thought this one was, but in terms of a stop loss, this was the real setup here. So let's, even if you waited till here, so waiting for the MA cross, the 7 comes up through the 25. We get a nice reaction up to there. So would be entered here based on the MA cross, huge R&R. So we come up, we find flash wick through the 99, come back again, and then just watch how it reacts to the 99 here. You've got 1 candle closed on it, 2 couldn't close above it. Then you get the next one, the next one, the next one. We're talking about 4 to 5 hours worth where we can't break through. So when we do finally get through, this is the biggest reactions that you get are when the 7 crosses the 99. So you can see this. Sometimes you can catch it just before. Sometimes it's a bit of a tough one to call because they do curl sometimes. So confirmation, you might have to then wait till you're about here to make sure in terms of time wise. So maybe 10 minutes into the candle, you'll know that the previous one had closed, if that makes sense. So it's very much trial and error and getting used to the MAs. So that cross comes up, we come all the way up, start a bull flag, broke back out. Now this is what's interesting, what I find with the MAs. Notice that we got the 7 and the 25. That then kicks it up, but you don't get that same reaction as when the 7 crosses the 99. You get a decent one, but obviously not as extreme. Now this is where I usually make most of my money, is buying the bounces. So when it becomes clear that we're running out of steam here and we start coming down, obviously you've got this little part, this little reaction there, but that's nothing really, it's basically noise. That comes down, look at that reaction, comes down, bounces straight back up. Now once that happens and that cross has happened, the 99 is like a magnet. It will pull price to it. Now people saying, oh, it's a lagging indicator and it follows price. I don't think it does. I think the price follows the 99 on the 1 hour. Look at it here. It's basically a horizontal, and this comes down and bounces straight off it. So this is where the bounces occur. I mean, look at that one there. Let's have a look at that actually. Even if you just entered on that second touch, or almost second touch, within 1 hour there was a 12.91% spike. Now you're not going to catch that, obviously perfect. You might have sold it here. Probably best would have been about there, just inside those tall wicks. So you're looking at a 7%, sorry, a 9% gain realistically, just based on entering on the 99 bounce. So we go on, we got the 7 through the 25 again, which you get that nice little push. Again, not the same reaction as you do when you get the 99 usually. We come down. Now this is proof that it doesn't always have to touch. You know, nothing in trading is set in stone, so you need to be able to adapt to it. So this looks like it's coming down here to copy this route down there, and then expect to push up. Doesn't quite make it. This MA comes round, curls back up, price then drags up the 7 MA, then we get that cross, and that's when the fireworks happen on here. So I've noticed as well on these sort of pumps, once you're below the 25, that's when you get this big reaction here. So let me come up, let me just auto that. So we get that push off, MA crosses, and then slingshots straight the way up. We do get a close under, but it looks like without the second close there's not confirmation. So we then get another spring up. It's not done yet. All the way to the top. Now there's 1,000,001 ways you could have played this. You might have sold here because you thought, but it doesn't matter. I'm telling you, this is your entry point. If that's your stop here, you raise that stop as you go, use it as a trailing, maybe even a 5% spread. You may have got wicked out there, but if you're watching it live, there's no reason why you can't then re-enter. So we follow it, just normal price action. Starts to lose steam, comes back down. Again, 7 MA crosses the 25, and that magnet just comes back, but where price is pulling up the 99, so they sort of meet in there. Don't quite make it again. Right, so we've got side action. So this is really the main point of the 99. This is why I use the 99 over pretty much the 7 and the 25, because they're too correlated with price. So we get one touch here, sprung up, another, big spring. Now even if you're catching half or a quarter of these, you know, they're 11%. Then you're going to get another chance. Sorry, I don't know why that's done that. So that was the first one. So that's 11%. So even if you sold there, you're looking at a 6% just on the bounce alone. This one here comes up, entry on the 99, stop loss, even if you said 2% or just under that last touch, so 3%. And then you've got a 23.23% pump off that second touch there. Now these are, you know, they're violent pushes, they're bounces, tradable bounces, another 12% there. So this is all within 2 days. So once you find one that's working, like here, once you recognize that bounce there, you get the next bounce, the next bounce. Now, like everything with the resistance and the support, the more times it touches the the more chance it's got of actually going through. And that's what happens on this last touch there. We get that close underneath, and then look at the reaction again with the 7 and MA and the 99 MA. Really violent down, and that's what you'll find most of the time. So that's a 7%, 7.5% say in 1 hour candle, just on that MA cross. So again, that could be another place where if you was holding it, you would short sell. So you'd sell your bag, and then with a stop buy here, and then you can pick up more coins down there. Or you buy the same amount of coins and you just leave the excess Bitcoin. I tend to do 50-50. So we come up, if we follow this down, bit of sideways, get another push. We actually close above it, but then the second candle is so important with this, with these MAs. Just for the sake of that extra, maybe 20 minutes, half an hour, you'll know if you're going to get that second candle close above. And this one comes here, comes down, and the reaction to get back through the 99 is pretty extreme yet again. Blast through the 7, blast through the 25, which is where you can sometimes get a bounce, but more on an uptrend or a downtrend. So pretty much just usual chop. Again, another cross there, down cross. This time we get 10% drop just on the cross alone. This one actually looks like it preceded the big candle. And then I think we picked up, if I remember rightly, about, I think it was 3192. So we was about here in the Telegram. Once that come back up, looked like it had bottomed out. So we ran that up. I said the target, this is where I gave the call to sell in the Telegram. When I mean I'm prepared to buy the breakout, is that second candle close above the 99, and then we go back to fib levels or support and resistance levels. So just based on that, we didn't quite get there, and I think pretty much all of us got out. We dropped 20, so far 20% already. And the next time that this does reverse, I'll keep an eye on it, and I'll be looking at this 99 for a bounce. So once this breaks, once this price comes back up, you'll expect a curve 7 through the 25. You should get a reaction there, and then around about here is where you should see a bounce off the 99. So it went on probably a little bit longer than I expected, but I just wanted to make one video on the MAs and cover all bases. So hopefully that clears up what I look for and how I trade them, and any questions, let me know.